Okay, guys, if you have any questions, I'm gonna try my best to answer as many questions as possible. If you have any questions, please post them in the Q&A, and I'm gonna do my best to answer them. I'm not gonna be able to get to all of them, but I'm gonna do my best. So, okay, let's get started. So, if you guys, my first really public um discussion, I guess, of my weekly strategy, which I didn't think would get interest, but it did, was for the Traderline conference over the summer. And so I'm gonna just cover briefly. I'm gonna go back over the slides and not all of them, but I just want to emphasize a couple points, like where I came from, my personal experience, and why weekly charts in the first place. So I'm a big advocate for less is more, simplifying your strategy. I think that most traders fail because they do too much. So it's just interesting, right? Like I had a conversation with my mom, and my mom uh has always, like, she sees I have success in the stock market. I'm making money, but at the end of the day, she's always like, it's super risky. Like, you got to be super careful. The stock market's risky. A lot of people lose money, etc. But like on the other side of things, the entire world, or at least let's talk about, the United States, right? Every single person, even if you're not thinking about the stock market or you're not interested in trading, you're relying on the market to retire. You're contributing to a 401k, you're contributing to something. And so if it wasn't for the stock market, you wouldn't be able to have a good retirement. And so why is it a guarantee that people, who save over a very long time and invest in the stock market will grow their wealth, but the people that dedicate their time and decide to become a trader, uh, why is the failure rate 90%, 95%? Why do most traders lose money? And my theory, my observation is that they're just doing too much. I think I made a tweet the other day, kind of as a joke, but kind of serious as well. Uh, you know, there was a conversation a while back. How can we get more people interested in the stock market, except guarantee that they lose money so they keep funding the system? And so they invented intraday charts, right? And so it's a joke, right? Like, trust me, I know a lot of traders that use intraday charts and they make a lot of money. I'm not, I'm not trying to say that it doesn't work. It's just, it's not realistic for most people. The more you interfere, the more things get ruined. And I also shared the other week that in a bull market, which we're in most of the time, 3 out of 4 stocks follow the trend. So when we're in a bull market and we're going up, and 3 out of 4 stocks follow the general market, and most people are still losing money. If you review your trades, I mean, there's risk management, right? Like, it doesn't matter how good you do. One bad trade, one undisciplined trade can ruin all your progress. So it's all about risk management, but it's also about just like interference. I was very focused when, a couple of years ago, I was very focused on trying to keep my capital, like, in the leaders that were moving the most. And I was thinking, like, I don't want my money sitting in a stock if it's not moving right now, because there's other charts moving out there. And so there was so much of the timing element where, all right, this stock that I'm in, there might be nothing wrong. The long term may still be in perspective. Weekly looks great, but like there's a bunch of other stocks breaking out, and so I would sell, and I would buy a new stock that's breaking out and try to allocate my money towards what's moving right now, right? Because there is, and we've all heard, essentially, not just risk and losses, but like if you're sitting in stocks that aren't doing anything, then uh, that's also a waste too, right? You want to put your money where it's working, but the timing element is the hardest of all. And so I think that's where a lot of people struggle. And so where I kind of found success is sometimes the stocks that I buy, they won't be the ones that everyone's talking about. They won't be the ones that are moving the most every day, at least at the time. But the trend is still intact. It's making progress. And eventually, when it does move, I'm still in the position. And when everyone's talking about it, I'm positioned well, right? Versus trying to keep moving your money to where everything's moving right away. And just the more you try to time the market, uh, the harder it is. The market is absolutely I absolutely disagree with the people that say you cannot time the market, and I've never seen a rich technician. I think that is ridiculous. I think I don't know how you you can time how you can be successful in the market without technicals, without charts. So basically, I think, less is a lot more. And also the reality for most people, and I'll jump right into this in a second and we'll get started. I know I'm a little long-winded right now, but the reality for most people is that you're working a full-time job and you're also interested in trading the market on the side of that as well. And so when I first started trading, I thought the pattern day trade rule under 25K, you can only do like a certain amount of trades. I thought that was the biggest thing holding me back. But now, like right now, there hasn't been a single time this year that I would have hit that pattern day trade rule. So for most people, the reality is like you learn about trading, you're trading a full-time job, and you feel like if you're not finding the success you want, it's because, oh, maybe my job's getting in the way, and I need to dedicate my full attention to trading, right? And that let me tell you why that is the worst decision for two reasons. One, when trading is your full attention, you're just going to be tempted to make decisions when there's not decisions to be made. And weekly charts really help with this because it just reduces the number of decisions. And so for people that are working a full-time job, it's super easy and not easy, but it's super realistic for most people to use a longer term approach with a full-time job. You don't have to check the market every second intraday. It doesn't matter, right? You make your plan and you go ahead. And so I really think that this is just appropriate for a lot of people. So if we jump in, if you guys don't know about me, I've been trading for about 11 years. I do say investing just because I kind of do see myself as an investor. Just because I don't know. I'll probably change that because at the end of the day, right, like traders become investors when they hold on to a position that's not working and they decide they want to flip to investors. I'll probably change that, but it's not important either way. Co-founder of Traderline and Deepvue. Obviously, you guys are here. Um, I hope that you guys have followed us. And if you are a DOCU user and if you have been with Traderline, we appreciate you guys. Thank you very much for the support. So this is basically what I see happen, the overcomplication trap. So misleading simplicity. So when you get interested in trading, you you're kind of drawn in by foolproof indicators or systems. So, oh, if you learn these three setups are the only thing you need to know to make a money in the market. Or I saw a thread the other day that was like, this is for small accounts, like here's the copy paste strategy that you can make $1,000 every day. And people get drawn in by that. And it's super sad kind of because that's what gives the trading industry a bad uh I don't know what word I'm looking for, vibe, I want to say, but I could do better. But that's what gives, the industry a bad rap. And it's because there's obviously a lot of um untruthfulness, and people are selling dreams and unrealistic strategies, right? It doesn't matter if an indicator has a 90% success rate. If you put someone who doesn't have the mental experience, or they're not conditioned and understand how to deal with the market and the fluctuations that come with actually having real money on the line, then it doesn't matter if an indicator has a 90% success rate. You're still gonna fail. Uh so yeah. And also I see yeah, I'm looking at the chat. I'm trying not to look at the chat too much because I have a short attention span and I'll completely lose my train of thought. But I do see somebody, Brandon said, if someone's trying to sell you on something, they're just trying to sell. And so I do, um, I disagree with this just a little bit. So that was kind of the motivation behind why we started TradeAlign a long time ago. And, TradeAlign does sell education and courses, and but we're different in the sense that we work, anybody can come and sell a lie and unrealistic expectations, and the the industry is just crowded with that. There are so many people who flash Rolexes, Lamborghinis, just this lifestyle that you can sit on the beach and travel the world and place a trade, and you're going to be rich. And that is just it's just not realistic. And so we really wanted to bring good education, verified traders, to like, and just realistic expectations uh to the world. No, Brandon, no, this is no, I know you were agreeing, and I know, don't worry, I just wanted to use that as a as an example. So cool. So basically people join trading because the misleading simplicity, right? And so when that's what gets you in. And then you have so many layers, whether it's because you learn from an indicator from one person, or and then it fails, but you've had one or two good trades with it, so you don't want to get rid of it, and then you uh follow someone else, and then they teach you something, and over time you have all these tools and these indicators, and it adds a bunch of layers, and at the end of the day, like, you don't realize why each layer exists, and that is super important. And so something I like to stress is right here: every indicator is a derivative of price and volume. So, however much somebody wants to push an indicator and its accuracy, all it's doing is just telling you about it's a derivative of price and volume. So before you even rely on any indicator, you need to understand price and volume. That's number one. And when you understand price and volume, then you can make better decisions to decide what indicator you want to add. So this is an old slide. This, like I said, this is from my my trading conference presentation, and I'll update you guys, on where we are today. But I think a lot of people can relate, and I think this is kind of what got a lot of people interested in my approach. So in 2014, the S&P 500 was up 11%. I was down 15%. I placed 600 over 600 trades. That's very demotivating, right? Like, when you put all your effort into something, and every single day you're trying your absolute hardest, and you're down 15%, you lost money at the end of the year. Meanwhile, if you would have just bought the S&P 500, never thought about the market again for the rest of the year, you'd be up 11%. And so this was really this is the motivation behind my current strategy. It's extremely frustrating. And so 2024, this was months ago. So S&P was up 16%. I was up 62%. I had 24 trades. Now, I'm a little disappointed in some of the actions that I've made. Now the S&P 500's up, I think, like 23%. I'm up 80%. And my trades have pretty much doubled to about 40. So made a little progress, especially considering the S&P 500 has done a lot more this year since this presentation, and I've just made not as much progress as I could have. And so a lot of you guys, if you followed me, you know that I was pretty early in APP, which is one of the strongest stocks, if not the strongest stock in the market right now. I ended up selling that for a 300% gain, which is great, right? At the end of the day, that's awesome. But if I would have never placed another trade since this presentation and I would have kept my trades at 24, my return would be well over 400% this year. So we're not perfect. Like nobody's perfect. I make mistakes all the time. Uh, and this is like I'm just again proof that doing too much is usually just hurting you. So yeah, that's kind of where my motivation came from. So if you're over here and the market's up 23% this year, but you're down and you've placed a ton of trades, just review your trades, right? Like just review your trades and see what it is. It's one of two things. It's either you let a loss turn into something bigger than it needed to be, right? Something that could have been manageable turned into something that sets you back. That's one. Or it's something that never gave you an exit signal that you ended up selling that is now up a lot higher uh, than when you sold it. So I'm not talking about holding something that went below your stop and you're hoping that it turns around and now it's higher. I'm talking about the trades you interfered with that if you didn't interfere with, uh, you'd be doing a lot better. So that's kind of just look in your trading results and you'll see that for yourself. So uh so before we jump into my actual process and screening, I'm going to jump into my screening process here in Deepvue. I'll just give you a little more. So my early trading experience, information overload, right? I was analyzing every bit of information I could get. I thought that the more data and the more information that I could get, uh, that the more certainty I would have. And there is no certainty in the market, and you just have to accept that. And that's fine, right? Because there's still an edge in uncertainty. And I just spent a lot of time thinking and over analyzing. And so I had poor results, inconsistent performance, no confidence, no plan. Um, and I put this here because it's a cycle. If confidence comes from every single decision. So if your performance this year is, you're going up 10% one month and then you're down 12% another month and then you're up 5% and then you're down 7%. If your performance is rocky, then you're not going to have that confidence to go forward and make the best decision. So every single bad decision that you make, if you let a loss turn into something bigger, or you just chase a trade that you knew you shouldn't have, all you're doing when you make that decision is you're making it much easier for you to make that same wrong decision the next time. And vice versa. If you cut a loss short or if you wait for a trade to show itself, you are going to make it easier the next time for you to wait for a trade or for you to uh, cut that loss. So I was basically in just a quest for control. I wanted to feel in control, so I would try to consume every data source, right? Like the news. I was trying to find certainty where it doesn't exist, and I needed a rational answer for everything. And like if you guys follow me, I posted the other day also, like the market doesn't act rationally. You don't need a reason for every move, right? You just need to follow the price action, the volume, and you need to make your decisions off that. So self-reflection, do I want to know a little bit about everything, or do I want to make money? I ultimately decided I want to make money. And so the last thing here, this is kind of the simplicity formula that I put together. What is your edge? What information is crucial for you to execute it? And anything that's not directly relevant is holding you back. And only you can answer this with self-awareness. I have explained to you guys why I do weekly charts, and some people's personalities, they might not like weekly charts, but weekly charts work for me. So my thought process, which I've shared, why did I decide to focus on weekly charts, 10-week, 30-week moving average? I'm indecisive, right? I don't want to make a decision every day. And I think most people, like, there is no decision to make every day. I like holding stocks, not entering or exiting. A lot of people like a lot of people struggle with holding stocks and letting them work, but and holding usually is the hard part for people, but I love that. That's like what gives the passive to what we do. I think like if you're actively focusing all of your attention, right, placing 600 plus trades in a year, then that's not at the end of the day, that's not like passive, right? That's like another job. And so I really like getting good entries and being able to hold in a good market for as long as possible because it's essentially more passive. And it feels like, when you're sleeping, if things are, you just like, you're not focusing all your time on something, and it just feels a lot better. So also, the more I watch the market, the more tempted I am to do something. And my best trades, when I reviewed my trades, all of my best trades, they were held for multiple months. So for me, weekly charts promote patience, and they lead to fewer but more impactful decisions. And longer term trends are much easier to identify and time than shorter term trends. Every trend exists within a larger trend, and the longer term trends are always much easier to identify than shorter term trends. Now, before we jump into Deepvue and my actual process, I just want to say avoid rigid thinking. So I've shared my character change setup, and part of the setup is I like to see new respect by the 10-week moving average or the 30-week moving average, but you don't want to think of it black and white, right? If you think of the character change setup, there's three pieces of it, which we'll get into, and they're all fundamentally just characteristics of what is needed for a stock to go up. And so if you just work within the boundaries of those characteristics that are needed, there's a little bit of flexibility. And so when someone says, I like to use just for an example, when someone says stops at the 50-day moving average, uh, what do? Like, to everybody, it means something different. Do you set it on the 50-day, 1% below, 2% below, or do you give it until the end of the day? So avoid rigid thinking. For this, there is no right answer. Uh, and that's what makes trading an art. So cool. Now my approach, character change, I'm looking for subtle shifts in a stock's behavior. So now now that I explained kind of the benefits and my personal experience, I'm going to jump into my daily routine, running scans and adding to watch lists, and then I will dive a little bit into my two favorite weekly bases, the character change, and then I don't have a name for the other one, but just long base. Okay, so a lot of questions I get about weekly charts are well, no, the dogs are fine. They just have to go out. So, and one of the main questions about weekly charts is, like, there's not like, what do you do every day? There's not something to always do. And how do you manage risk? Because the charts are a lot wider. So I'm going to show you exactly what I do. And you're right, there isn't something to do every day, but my process and how I organize things, I'm always ready. when there is something to do. So number one, which I share quite a bit, is I run up on volume, and this is a very simple screen. It's just looking for stocks that are up on the day. The closing range is above 50%, and they have above average volume. And so what I do is I will just sit. Uh, I'll go through this, and this is kind of where everything starts. And so all I'm doing is just looking for something interesting. So APP is up on volume. This is pretty crazy, but there's nothing to do here now that I'm not in it anymore. This I don't know exactly what this is. It's for like an energy stock. So this volume here is like telling me I want to pay attention, but the chart itself is really not saying much. There's really not much to do here, right? There's really no structure. There's no definitive basing area. And it's just very wide and loose. And uh yeah, I would say yeah. Sorry, I'm just looking at some of the questions that are to host and panelists. Yeah. This I would say is just like this is kind of messy, but this volume is pretty big. So what I'm going to do is I'm just going to click this and I'm going to add it to big volume. And so I characterize my watch list into three watch lists. It's either basing, the stock is either in a base and there's nothing to do right now, but the base is large. When it breaks out, I want to be a part of it, and so I'll add it to basing. The other is big volume, and this is just looking for a big volume. Volume moves the market, and there's a lot of there's people that say volume is dirty, and I agree and disagree. Mostly I disagree. Volume, yes, like there is a dirt like it can be manipulated, which is why Ross the other day or a week ago or so was talking about distribution days. Like back a couple of years ago, distribution days, if you get a few distribution days on the index and like in a cluster in a short period of time, it would be an automatic sell signal. But now if you get that same distribution day cluster on the indexes, but leadership, like all the leading stocks and everything look really good, there isn't like it's not a definitive sell signal anymore. You need to take more into account. And so, yeah, that's because of HFT and the volume can be manipulated a little bit. But when you have things like highest volume ever, so over here, you could see on the right of my chart over here, I have HV1, highest volume in 1 year, HVIPO, highest volume since IPO, and HVE, highest volume ever. When you have volume signatures like that, it doesn't matter if volume is dirty or not. That you can't fake this. Like this is purely because huge institutions are buying a lot of stock and they're buying, hands over fist. So when you see volume this huge, the argument of is volume dirty, it's irrelevant. It goes out the door. This is the type of volume that sparks big moves. Yeah. So, real quick, just because I know that I'm getting a lot of questions on the volume. So this is just the Deepvue enhanced volume. And so uh the Deepvue enhanced volume by default like matches the volume to the candlestick, except the above average strong days, it colors green. And so the green above average strong days, I just turned blue and I just kind of made everything else darker because that's all I just want to focus on. It helps you tell, it just helps you focus on what's needed. So I think I added this already to big volume. Now we will keep going. So far, like these are all just ugly charts. Kava, like this is obviously a great looking chart, right? We're near highs, but there's nothing to do here, right? This is very interesting. The chart again, it's not very nice, but this volume is obviously humongous. So not sure what's going on here. It's a biotech, it's a pharmaceutical, which I'll put it in big volume, but yeah, not too sure about that. This is pretty ugly. Ugly. It's not an interesting industry group. So like this group is ranked 24 out of 25, so this isn't a strong group. But look at this volume coming in, right? This isn't a character change. Like this essentially might be a high or low, but it's really just kind of straight off the bottom how I'm looking at it. And so this right here doesn't like it's not a character change. It's not something I'd want to buy. But again, this volume is massive. It might be a character change. But I'm going to just add this again to my big volume watch list. For anyone that missed it, the the categories that I save my watch list are basing, character change, and big volume. So character change, we'll get into. Big volume is just big volume means there's a huge surge of volume, like an overwhelming amount of volume, kind of like you're seeing here, that comes into the stock, but it is nowhere near buyable. And it could look like anything. This could be near highs, it could be near lows. It's not buyable though. And so I put it on the big volume list, and over time, eventually, it's going to give an entry point, right? So something like this births the trend, or births a new trend. When you have volume like this, it generally creates like a new trend. So really quickly, guys, I'll just show you, which I've shared on X, ONON. So I added this to my big volume watch list after this week. You could see that this right here, this gigantic volume, and not just huge volume, but you have strong price action with it. So this strong price action with the big volume is telling you that, okay, not only do we have overwhelming volume, but uh, it's a lot of buying pressure because the price action matches it, right? We close off highs, but at this point in time, there's nothing to do. I'm not going to buy up here. How do you manage risk? There's nothing to do at all. So I add it to my big volume watch list, and then you just wait. And this stock here, I watch this first pullback over here, and I kind of just noticed that, all right, this low, it's a higher low, right? So off this where we broke out from this huge volume, we pulled back and we found support higher than this area here. So that's a higher low. And that's just an observation still. There's nothing to do. And so what I did was I just kind of put a trend line and we kind of chopped around. And then when we came back here this week, we kind of approached the trend line again. And so yeah, it's below the 10 week, it's below the 30 week, but we have this huge volume push, which is like the birth of a new trend. And this is now a very low risk opportunity to get in on the weekly. So everybody always asks about like managing risk. So if we just look, like I entered around like 2640, and then if we put it at the low week, it's like a 3% stop. So a 3% stop on a weekly trade, most people think is uh, you know, not possible, but it's totally possible. It's just you have to, like, if you're just gonna scan and find a random weekly chart breaking out, it's gonna be very hard to manage your risk. But if you are organizing them and just following up with them day to day, week to week, you're gonna notice these subtle changes. And look how ONON, which unfortunately I'm not in anymore. I sold at like 43, but look how this just plays out. And it's not surprising because when you get huge volume like this, it gives birth to a new trend. But just because you see that huge volume does not mean it's a buy. Because if you would have bought just following that, you would have lost money. You would have been stopped out. And so you still have to be patient, and you still have to wait. And so that's why since I was watching this for a few months on my watch list, by the time it came here, and to most people, it looked like uh, a terrible opportunity. It was breaking down below the key moving averages. To me, just because I was watching it for a few months, and I knew it had this behind it, it just becomes a high probability, low risk trade. And so, uh, yeah, it's just you have the bigger picture in mind. So I'm gonna get back to up on volume super quick. Where is it? Okay, so yeah, someone Ross, nice. Ross Haver just said the trend line coincides with the original pivot as well. So let me actually just pull that up now that Ross is in the chat, guys. Ross is in the chat. So yeah, this essentially, right? Like if this is the pivot over here and then the volume broke us out here, this day, this not only is this a high or low, which prompted me to, okay, there might be a trend that we can see here. But yeah, it retests the pivot. So that's why the market is it's an art. So like if you draw a horizontal line here, you can see, yeah, we retested the pivot. So honestly, like uh, if I was Ross, maybe I would have bought here, but I didn't really, at this point in time, I didn't really see it as a retest of the pivot. I just saw it as, okay, and let's see if this holds because it'll be a higher low. Ross, there's some people that are sending messages that only hosts and panels can see, and I know you're not, but lots of love heading your way. So, yeah, so again, there's many ways. So yeah, it looks like in hindsight, this was a really good buy, but to me, this was just a higher low and the beginning of a new uptrend, and so I didn't get involved until over here. But weekly charts are what make this possible. If we look at a daily chart, like if you're looking at a daily chart, it's very hard. I'm gonna move this trend line. Like it's very hard to see kind of what's going on. Like it's just all of these candles, if you're trying to let time work for you and you're trying to let your positions work and you're trying to do less and you really want like your trades to compound, then looking at all of these daily candles is kind of crazy. Like look at this. We gap up, we gap down, we gap up, down, up, down. There's so many gaps in here uh on a day-to-day basis, but it doesn't need like this doesn't need your analysis every single day. So on a weekly chart, it just becomes a lot easier. You just kind of you're able to see the trend. Uh yeah. Rick, yeah, Rick, yes, this is the 30 week is this red one here, and the 10 week is this gray one here. So ONON does have the 10 and 30 week moving average. However, like when I did purchase, and also where Ross mentions the retest of the pivot, it was below. And so that's why I always say that trading is very personal and it's more of an art than a science. If you have an algorithm that you're creating to trade the market, then okay, trading is going to be more of a science, right? But that's not most of us. Most of us are you need to be able to see things that aren't black and white. And so if you guys follow my character change setup, which I'm about to jump into really quick, and you see I like to see new respect for the 10 week or the 30 week, then this wouldn't have been obvious because it's below both the key moving averages, right? But when you just look at the weekly chart and you have the bigger picture in perspective, uh, it just becomes very obvious. So I'm just gonna go through this just a little more. Um, this is one of the worst charts I've ever seen. What is that? Diz. So is this Disney? Okay. So this is Disney. This is kind of a character change, right? So we've been beaten down quite a bit. We made a low over here in September of last year. Uh, tried to break out. or just move off the lows, failed, pulled back. But what's important to me is that this pullback is a higher low. So that is essentially a character change. So if I just take a trend line and I try to, right, it doesn't have to be perfect, but I try to do this. Now we kind of have this like new upper trend. And on top of that, we have this gigantic volume that's coming in. So, and we have a couple here. So we have, like I said, volume doesn't mean the move is going to happen right away. Institutions aren't thinking about turning a profit in a day. Uh, and when institutions they have so much money, like they have to do their buying over months, weeks or months. So if you have to buy over weeks or months, then your profit time frame is much longer. So just because you see these huge volume bars right here, right? Like how come we broke out or pushed up here with this huge volume and then failed and like undercutted it? It's because it doesn't have to work right away. You just have to take note that we had this huge volume, we had this huge price action, and now we're seeing the same thing here, right? Big volume, higher and low, big price action. No way in hell would I ever buy this right here because you can't manage risk. And it seems crazy to most, but look at this trend line, right? We have a higher and low. Now, if something happened like over here and we sold off and this starts coming back down near this kind of like trend line that we have built, then and it makes a higher low than over here, then that's now a very high probability trade. You have all this volume and accumulation behind you. You have higher lows, just proving that the trend is moving up and in your favor. Uh, and and uh, and that's it. So a lot of this is just waiting. But when you do this every day, and now I'm gonna add Disney to big volume. When you do this every day, like there's usually there's something interesting all the time. Like this stock right here may not present a point where I want to buy for 2 weeks, 3 weeks, 2 months, 3 months. You don't know, but this is just one I'm adding to my watch list, and so I've got a bunch of others um that there's a lot to do. Character change. It could Disney could be the character change. I'm gonna tell you why it's not. So the reason I'm adding this to my volume and not the character change is just because I use weekly charts, not really monthlies, but if we do just for a second look at like the monthly, Disney essentially like uptrend, and this is kind of like one big base. So this is a log. This is a log chart. Disney is essentially just like we had a big uptrend and we've kind of just for years been in this range. So this is kind of like it is a changing character, but it's not essentially like the character change that I explain. It's because like we're still kind of in an uptrend. So I would just feel more comfortable adding this to the up on volume. Like if you guys look at APP, right? APP when it came up on the character change was over here. And so if you look to the left of the chart, APP's been in a long but it's been in a downtrend like overall. And so now like the stock's been beaten down and we're seeing a big change in character coming off the lows. So the character change is an important part of it for that is the stock has it's changing character from a downtrend uh to an uptrend. Somebody asked, do I get a higher win rate with log chart? Uh Log chart or whatever the other one is, it doesn't matter. Like you just have to be used to whatever whatever you're looking at, right? Like I just think that log charts are way more accurate. Sometimes charts look better on the other one, but log charts are just I just think like a better representation of what's going on. But it doesn't matter. That stuff at the end of the day, like what chart you use, log or whatever the other one is, or if you use the 30 week or the 40 week, uh it like or you use SMA or EMA, that stuff is so irrelevant. It does not matter. That stuff doesn't matter. If I change my 10 and 30 week SMAs to EMAs, that's not going to affect my results in the market. Like that is such minuscule, like short term. You're not like not big picture thinking. That stuff like it doesn't matter. At the end of the day, these moving averages is they don't work because the 10 and 30 SMA are super secret and just like have a secret to them. It's because they I've learned from great traders that use these, like Stan Weinstein, and I've just familiarized myself with these charts. I mean, with these moving averages. And so I'm very used to these moving averages, right? Like if I change my 30 week to a 28 week and I change my 10 week to a 12 week, like I just have to get used to those. Like it's that those things are just irrelevant. They don't matter. Uh, they do not matter at all. You can trade pretty much any moving average you want. It's just you need to understand and familiarize yourself over time with okay, how does a stock respect that moving average? How does it act around that moving average? Etc. Yeah, Ross just said log charts allow you to compare one bar to another, where arithmetic they shrink as you go back in time. Yeah. Like if we just look at what is a stock right now? So root maybe. Okay, so this real quick, I this isn't what I thought it was gonna be, but this is uh a pretty crazy looking chart, right? We have this downtrend and then you have this huge spike in volume. We kind of move sideways and then this other huge spike in volume. And again, we're holding near kind of the highs and another spike in volume. So there's nothing to do here, but I am gonna add this just to oh, it's already in my big volume. Okay. So like this is on a log chart, guys, this RKLB, but if you look at it on arithmetic, nah, it's not a good example. I'll try to find a good example. It's just arithmetic sometimes makes like every stock look like a stage one that's about to be a stage two, uh, which isn't, the most realistic. Um, cool. Okay, so I explained my so I explained kind of the scans I run mostly, guys, like I'm most of the time I'm literally just running up on volume. Not only am I going through the different stocks in here and adding them to the watch list. So I'm in Tesla right now. This is, I think, honestly one of the best stocks in the market at the moment. Uh, and it's just building a big base. So the last part of this webinar that I'm going to talk to you guys about is I just went over my weekly routine. I kind of went over why weekly charts make sense for me. Um, and hold on real quick, guys. I'm just going to post in the chat. I just want to if anybody's not signed up for Deepvue, I just posted in the chat. We do have a Deepvue. It says my name's Rye, but we do have a Deepvue Black Friday going on right now. If you are currently a member, do send an email to support and hello at Deepvue and say that you're interested in the Black Friday and we'll help extend your membership. So, all right, back to it. So Tesla, this is a current position I'm in, and Tesla, like if you're looking at a daily, Tesla is kind of all over the place, right? Like this is okay. Are we in an uptrend? Are we in a downtrend? Tesla is kind of just all over the place. But when you zoom out and look at the weekly, you kind of just get a much clearer picture. So now when you look at this stock instead of the daily, right? Like if you're looking at a daily chart, then since 2021, Tesla has done nothing and there's no reason to look at Tesla. But if you zoom out and look at the weekly chart, You have a massive breakout in 2013, and then a super long base, and then a massive breakout in 2020. And now we've just been building a base for a few years. So now, like, essentially, if we get out of this base, it's going to look like this. It's going to look like this, right? But a lot of people are missing this base in Tesla because they're looking on a shorter time frame, and there's no such thing as like a base for the past 3 years, right? Like, but when you're trading for weeklies and you're looking at weekly charts, 3 year bases, you'll notice them. And so not only do we have this base, it's not as clean as over here, but we have a higher low. So we pulled back the bottom of this base, we pulled back again, higher low, and now we're really pushing up the right side here. So this is, I think, one of the best stocks right now in the market, especially given political things that have happened recently. And um I totally forgot what I was gonna say, but Tesla is I think well, oh, and based on the weakness from Friday, Tesla was up and doing pretty well. So are the bad earnings and sales concerning? So not really. Like price price become price comes before everything for me. So price first, fundamentals second. Fundamentals are extremely important, but they are secondary. And so if you look here at like the annual earnings, you can see it is like kind of all over the place. Like when we did break out in 2019, 2020, we did have 3 years of accelerating earnings. And this is something that I look for. So for me, I look for either three, like besides the typical can slim stuff, they laid the foundation. I want to see 3 years or 3 quarters of acceleration. The acceleration is really big for me. So you could see here this blue bar highlights the acceleration for three years, and then Tesla did break out. And so, yeah, right now there is no acceleration for 24, 25, 26, etc. But these blue up arrows right here are telling us this is basically telling us that analysts have revised their estimates up. So, uh, and this is updated every like all the time. So basically, for Tesla, yeah, we don't have the 3 quarters of acceleration, but this is a massive liquid leader that is building a huge base near highs. And all for the next 4 years, uh, all the analysts have revised their estimates for earnings and sales up. So, yeah, we might not have the acceleration right now that we did for this prior breakout over here, but all analysts have revised up after the last earnings report, and so everybody was basically caught off guard and is now looking higher. So that on its own is pretty strong. How do I get this on the bottom? So if you're in Deepvue, right here we have stats table and data panel, and if you click stats table, it'll bring up the stats table here where you can have all your earnings. You can change it annual or quarterly, and then the data panel. The data panel you have a bunch of really cool stuff as well. So something that I do love is uh, Tesla is in the automobiles industry, and so you can see the top 10 stocks by RS that are in here, and you can see Tesla right now is the number one RS rated stock in the automobile industry, which is a really good sign. Uh, yeah, a lot of questions about earnings, guys. So when you're a screen template, yeah. So when you guys are trading earnings, I mean, weekly charts. Like it. So I told you guys I came to trade weekly charts, because when I looked at my best trades over time, they were held for multiple months. And so if you want to hold a big winner for multiple months, like you have to sit through earnings reports. Like that's not even a question. So the rule for me is if I have a cushion, which you can look up implied volatility for earnings, I generally keep it at like a minimum of 7%. So if I have a 7% cushion on a stock, then I will hold through earnings because if earnings don't do good, I'm kind of eating into my my unrealized gains instead of just taking a possible huge risk on no profits. So as long as I have that, then I never question do I hold through earnings or not. It's always yes. Like earnings are just part of holding leaders through multiple cycles. And if you really want to capture the big moves, you absolutely have uh to hold through earnings. And the only time where if I'm holding a stock and I have way more, maybe I'm up 100% in a stock and earnings are coming up, uh, the only time where maybe I'll say I'm not going to hold through earnings is if there's some major reaction going on in the market. So if it's earnings season and you see a bunch of really high quality leaders reporting earnings, and they're good earnings, but they're like having huge negative reactions and gapping down, that's a sign on its own. So if you have a bunch of really high quality stocks reporting really good earnings, you know how sometimes people say, "Oh, I don't get it. Earnings were good. Why is the stock down?" Well, if you see that as a theme across the market and really good stocks are getting beat down by earnings and starting to break down, then maybe I will just kind of get rid of mine before earnings because I'm kind of seeing weakness across the market. How does Apple look? So I will look. Um, yeah, let me see. Apple. Yeah, Apple looks like really good. It's just been in quite an uptrend. It's a solid company. Uh, I'm gonna point out two things with Apple. So I kind of made this trend line here, and I bought over here when we made that higher low, and then I was stopped out as we made another one. So now the new trend is here, right? So now it's very likely that this could, I'm not saying it will, it could just break out from here, but it could realistically pull back to this trend line. And if it does pull back to this trend line, people if you're watching the 10 week, which is this gray line, or you're watching the 30 week, which is this red line, and it breaks below, you might think, okay, it's not a good stock, but what you really want to be looking at here is the trend line of higher lows. Because if you look to the left on Apple, it has not respected the 10 or 30 week. Look at this. The up and down, up and down, up and down. There's no respect for the 10-week moving average or the 30-week moving average. So if Apple is chopping around both of these moving averages and not respecting it, then there is no logical reason to expect that this will pull back to 213, the 30-week moving average, and hold as support. You just logically, it could happen, but you cannot think that because if you look to the left, it has never done that in years. And so if a stock doesn't respect a moving average to the left of the chart, then you cannot use it as a guide for risk on the right of the chart. So to show you what I mean, if we look at APP, so look at APP, right? So this respected the 10 week and the 30 week in different ways. So after we kind of broke out from this bottom, started showing signs of a character change. Look, we pulled back a couple times to the 10 week, broke out, came back to the 10 week, kind of fell up the 10 week, and then it wasn't until we started basing that we broke it. But then we kind of acknowledge it again. So if I'm looking at APP, like you know, right here, I could see that this broke below it, but this is a quick, decisive shake below. Like this is still, in my opinion, respect. So now you have respect for the 10 week. So now APP coming back here towards the 10 week, I would totally use the 10 week uh as support going forward because it's shown it as respect in the past. Now, if you pull back, you could also see the 30-week moving average. Once we based and we started chopping around the 10-week moving average. Once we based, you could see the 30-week caught up and we respected the 30-week. Again, came back. Yeah, this was a vicious shakeout, but respected the 30-week. And so if you're using a moving average, you have to make sure like the most important thing for a moving average is does the stock respect it? This is a clear example of this stock respecting this moving average, and then on a longer scale, it's a clear example of the stock respecting this moving average. But if you're just looking at a stock that has like for example, look at the base here in APP, right? If you're trying to buy in this base and like you buy this day here thinking it's going to break out and you say I'm going to set my stops at the 10-week moving average. That's ridiculous. Like obviously it just cut right through the 10-week moving average because if you look to the left, we stopped respecting it. Yeah, the uptrend, it respected it, but once it definitively broke below, now it's just chopping around it and it's lost respect. So now the trend is not up, it is sideways, and it's not respecting that moving average anymore. So you cannot use that moving average going forward until it shows respect for it. So once we do finally break out of this base, and you could see like we kind of grind across that 10 week. Now, okay, next time we come back, like over here, you can you can use it as a moving average. So most important thing for moving averages is respect. You need to have respect for that moving average. So everybody is um everybody is familiar with my character change because I post about it a lot on X. And so I'm just going to show you guys kind of the other base. I kind of look for two things. One is the character change. Two is what I just call a nice base. I don't have a name for it. APP. So this base here that we built at like 40 and now we're trading at 291. If you look at this, if we go to a daily chart, if you look at this daily chart, this is just like, very it's very choppy, right? There's so much going on. You're trying to time all of this and there's just a lot going on. And like I said, it doesn't need your constant analysis. So there's really it's very hard to see the trend here. But if you go to your weekly chart, then it becomes very obvious, right? So what I see or what I like to see here is we had a major character change move off lows and we went from $9 to $40 and the base was built up here. So if this wasn't a real strong move, then when sellers started coming in, it would have broken down more and maybe the base would have built lower here, or maybe it would have continued in a downtrend. But the fact that this base was built near highs and on a daily, it might not have been obvious, but on a weekly, like this is very organized. You have a big uptrend, and then this is a very, very nice, neat base right here. This is something that is usually very, very, very explosive. And when you get organized, neat looking long bases like this after massive moves, that's when you want to pay attention. So recently, the same exact thing I was highlighting in Dave. Dave looks very similar to APP, right? You have it's pretty beaten down. You start building a bottom, and then we go from $4 to like 50-ish, 55. And then on the like let's look at the daily. I hate dailies, but let's look at the daily. So if you're looking at a daily, like this is just crazy. This is hectic. You're not seeing the clear trend. But when you look at the weekly chart, uh I posted this like a month or so ago. Like this is not only So if I go to quarterly, so we had look at this acceleration for many quarters we have acceleration and all the estimates are revised going forward based on their recent earnings, but we have the acceleration, you have the massive uptrend off the lows, and then the base builds near highs. So going from $4 to $50 and building the base in the upper range here, especially super neat, is what you want to see. And so look, we now have this huge volume breakout pushing us up. And this looks, very comparable to APP. It's also in the same industry. If we look at the software industry sorted by the top 10 RS stocks, you can see APP is number one, and then Dave's number two. MSCR is number three. So for Dave, yeah, so for Dave guys, like when I posted this, if you go to my X, like when I posted this, it was it looked like this. And so this was essentially the buy. So if you look in these organized long tight bases after big uptrends, you'll notice subtle signs. So when I add a stock to the basing watch list, this is what I'm adding. And the reason is like, okay, we might be building a base, but there's not always something to do. But if you look at it, right, the low of the base is right here, and then a few weeks later we made a higher low within the base here, and then before earnings another higher low. So these kind of like it's almost like Minervini's VCP. Like you kind of see like price contract a little bit, and you get the higher lows. This is essentially like you're able when you add something to a basing watch list and then it pulls back and makes a little bit higher low than a couple weeks prior in the base. These things are things that you would never notice if you haven't added this to your basing watch list and you're just kind of monitoring it day to day, week to week. But little subtle things like this you notice and you can act on. So real quick, if we go to APP, um, hold on, guys, one more time. I'm just gonna post in the chat because we're getting a lot of questions. Deepvue Black Friday. Uh, my name says Rye, but yeah, click Deepvue Black Friday there if you guys do want to sign up. Uh, and so APP, right? Like if you look at this, if you add this to your basing watch list, you notice that we have the low of the base here. And then a lot of people were trying to buy the breakouts, right? So uh you buy this breakout, you get stopped out, but then you kind of like give up on it, right? Like failed breakout, not worth my time, not going to pay attention. But if you're watching the weekly, you see the low of the base right here, and then we come in and this low here is higher than the previous low in the base. Not only that, but now we have the 30-week moving average catching up. This is a buy. Again, a couple weeks later, we put another higher low in, and this is all within the base, right? This is very subtle, and this is why I add stocks to a basing watch list because I love to keep tabs on bases on weekly charts because you notice subtle things like this. So higher low, higher low. You buy the weakness in these, and you're gonna be able to enter with extremely low risk. So the last example that I've shared many times, and this is uh, real quick, I just like to emphasize it's better to pay attention to the charts and some of the fundamentals than the story. So SMCI, I actually had a lot more conviction in from a story standpoint than I did APP. And now look at how they turned out, right? This is terrible. And APP is at all-time highs. And so the story just is usually just blinds you. But if you look at SMCI, we have the same thing. So you have this massive uptrend, and then the stock builds support and a base like over here. And now if you're on a weekly chart, this if you were trading this during the uptrend and then you get this huge bar here, you are probably just going to take it off your radar and not pay attention. But instead, if you notice, like, okay, we're chopping sideways, like we're building a pretty controlled, nice, organized base, this is something you add to your basing watch list, and it's something that you pay attention to because it was a previous leader and now it's acting very organized. And so if you paid attention to this because it was on your basing watch list, yeah, stocks on basing might not be actionable for, weeks or months, but we made the low in the base here, which coincides with the 30-week moving average, and then again, a little bit of a VCP action, right? Higher low here, right before it broke out. It just gets tighter and tighter and tighter. And so those are the two weekly things that I really like to look for. Uh, Either a strong leader that is having a massive move and then making a very organized base near the highs, or a character change, which is more like a docu sign, right? So this is more subtle. So here we kind of get the major volume push off lows, and then we build and kind of grind sideways here, put in a second higher low, and then we're showing 10-30 week respect, and now now this is essentially, as long as the market keeps going up, uh this is the very beginning, right, of a new uptrend. So same thing as DOCS, right? Character change. So start getting the volume coming in through here, and then you get a higher low, and then another higher low, and now 10-week respect, and you're just kind of grinding higher. So that's essentially it, guys. I am running overtime a little bit. So I'm gonna end it here for the most part, but um, as long as you guys found value in this, just let me know on X and I will oh, you know what? Really quick, I just want to mention sell rules. So there's a lot of things on sell rules. So sell rules, I'll have to do a webinar on that specifically because entries are a lot more, like, trading is not black and white, but entries are a lot more solid and easier to explain than exits, because I'll just explain my sell on a stock, not only does it depend on the actual technicals of the stock itself, but it also depends on the overall market and my personal progress. So SMCI, when I was accumulating this at the end of 2023, this broke out massively in January of 2024. And it went insanely high, right? Like I was averaging around 25 bucks. And then right in the beginning of 2024, in January, it went to like 112, or wait, what? Something's not right. Is that right? Did they have a stock split? I don't know. All I know is yeah, they had a stock split. Okay. Yeah, I knew this something looked weird. Thanks, guys. Yeah, well, regardless, right? Like this had a massive move so quickly, and because of this really organized base, which I was watching for months, I was able to get a very large position. And so uh the fact that this broke out so fast, uh and I was able to be pretty well positioned, and it was January of 2024, I ended up selling somewhere around like right here. And so I missed out on a lot of the move, which I would obviously, right, like now, thank God, because if you would have held all the, like, that's why you don't turn into an investor. But I ended up just selling this into strength because, one, I wanted to just, it was such quick progress in the beginning of the year on my portfolio, and I wanted to solidify that. And and that's why my sells are based on personal progress, as well as the technicals. So right here, there was no sell sign, but I figured at this point, like in January, I was up 50% on my portfolio, which is massive. And so I wanted to just lock that in because now for the rest of the year, uh, that puts me in a really good decision to make, really good place to make better decisions. When you're making progress and you're, uh, building, if you're making personal progress in your portfolio, you are, uh, just able to make better decisions, right? Like, so I just wanted to kind of to lock that in and, uh, solidify. And so my sell rules are essentially like if I would have held SMCI throughout this, I would have let it break the 10 week. So where I bought, you guys could see is like essentially on weakness in the base, and we could see the 30-week caught up here. And also if you look back at this, right, like throughout the uptrend, it didn't really respect the 10-week, but it was caught and respected the 30-week. And so the 30-week was the bigger moving average for me here than the 10-week because the 10-week wasn't respected. And so again, I'm not going to expect it to respect that moving average going forward. So it's kind of the 30-week. So if I would have held and not sold just to kind of solidify progress, then I would have been stopped out over here, which kind of ends up actually, funny enough, being where I sold into strength. But I would have definitely held through the break of the 10-week, and I would have hoped that this base would build, the 30-week would catch up, and then we would break out to new highs, except this one's a sad story. And so I would have been out on the 30-week. So awesome. Guys, I'm going to end it there. Um, I'm gonna end it there because we're running a little long. But if you guys enjoyed this, please let me know on X and I will do more. Uh I will also on X, I just don't want to leave everyone waiting, but on X I will share the scans and a little more information. So follow me on X. And before you guys go, if you are not a Deepvue subscriber, I posted the link in the chat, even though it says my name is Rye. And hop on Deepvue right now. We are a very motivated team. We put everything we can into Deepvue. Building a platform like this is very hard. It is uh, a lot more difficult than we initially realized, but that's what makes it so rewarding, and and so great in the end. So guys, if you want to join Deepvue, this is, I promise you, we did this price last year, but this is the very last time that this price will ever be available on Deepvue. If you are a current Deepvue user, please send an email to hello@deepvue.com, and we will take care of you to extend your membership. So guys, I see there's quite a few questions still on position sizing. I promise I will do a webinar on that soon. Here again is the link because a lot of people are asking for the link. It's in the chat right here. Also, if you just go to deepvue.com, you'll see a bunch of Black Friday stuff. Yes, Angel, hello@deepvue.com. Just send a message, say Black Friday, uh, if you're a current subscriber, and we'll take care of you. So guys, I hope this was valuable. And I hope to I'll do many more. And thanks, guys. I appreciate it. Have a good rest of your weekend.